want to get a fucking job. Oh, I don't want to work hard. The job market is shit. Nobody's fucking hiring.
So if you've been scrolling on TikTok, Instagram Reels, Twitter, X, whatever platform you use to freaking brain rot, right? You're gonna notice that there's this trend where a lot of people are crashing out on the state of the job market. And I'm gonna be honest, they kind of have a valid reason, because when we actually look into the data, the job market is kind of looking a little bit cooked.
I ain't gonna lie, I'm getting cooked.
Now, if you guys are new to the channel, my name is Justin from Push and Profit, and I make commentary very often on the market. I've been featured on several media outlets such as Yahoo Finance, Bazinga, Bankrate, and a few others, right? And in this video, I want to go ahead and talk about the state of the job market, because we just got some scary numbers. And, I'm not trying to be the doom and gloomy guy, but you guys kind of have to look at this, because we just got a report today. And this report is highlighting the layoffs that we ended up getting in October, which is actually higher than the layoffs than we got back in 2009 during the great financial crisis. Now, it doesn't yet peak over what we saw back in the early 2000s during the dot-com bubble, but when you have more layoffs in October than the great financial crisis, that's kind of a bad sign. That's a sign that things are cracking, things are crumbling. And, this is really unfortunate, because October is right before the holiday season, right? You have Thanksgiving, you have all the holidays during the winter, and it's kind of looking a bit of doom, doom and gloomy, right? It's kind of looking bad. And so I get why people are crashing out. Now, I think there's probably a better way to, maneuver and kind of walk through the certain time frame that we're in when there's a lot of uncertainty. But I want to go ahead and talk about something else, right? Because we also see this interesting chart over here that's floating around where people are highlighting how the S&P 500 has continuously pushed up, while the job market is continuously getting cooked. And they're attributing it to the release of ChatGPT back in 2022, which honestly makes a lot of sense. I've talked about this on the channel previously, and the reality is we have this huge dichotomy between Wall Street and Main Street. It's not perfectly parallel. Well, if Wall Street's going up, Main Street's going up, or if vice versa, they're both going down. They intersect, but it's not parallel. And that's where a lot of individuals kind of get mixed up, because you could see Wall Street continuously go up higher, while Main Street, right, the everyday people continuously have lower standards of living, or just a tougher environment. And the reality is that, yes, eventually it does intersect, right? Eventually, when you have so many layoffs, it starts to crumble and bleed into corporate profits. Think about Chipotle, right? We recently had Chipotle have their earnings, and earnings look pretty bad. And, one of the things they mentioned was that people are just not able to afford, $15 to $20 for a freaking burrito with guacamole. Right now, I'm not gonna lie, I still like to get some double chicken at Chipotle, but maybe I even myself, I gotta look at cheaper alternatives, because it's looking a bit crazy out here, right? And so I want to go ahead and talk about, what you should probably be doing moving forward, but also just kind of talk about what we could, understand moving forward with the market as well. Because when we look at this chart over here, we see that AI isn't slowing down. In fact, most of the construction that we're seeing is actually to build more AI data centers. And so AI is likely going to continue going up. And so we're likely going to be continuously seeing this trend of people losing their jobs, getting replaced by AI. And then, of course, a lot of these AI companies, or a lot of these companies that implement AI, becoming great beneficiaries of this kind of situation where, we have people losing their jobs, but then, corporate profits actually continue going up. Why? Because, hey, you could be much efficient when you just lay off maybe 20% of the staff, and then you could just replace it with, the rest of the people using AI who could still perform, productivity at a 2x return, right? So that's something that's a bit scary. And honestly, that's something that you should think of, right? Because moving forward, you should probably think of developing new skills that can help you become more stable in this unstable environment, right? Regardless whether that's, a new trade, a new type of field, right? That's something that you should kind of look into. Now, real quick, if you're wanting to learn how to analyze a company like a pro, then make sure to check out the Financial Modeling and Valuation Analyst Certificate that's offered by the Corporate Finance Institute, as it can literally take you from having no clue in what to do in Excel to becoming an expert at financial modeling, since it's going to go through building financial models from scratch, valuing companies and analyzing financial statements all through a super structured format. Plus, having the FMVA certificate on your resume is going to help you stand out, especially if you're trying to break into a career in finance, as a lot of professionals at firms like Deloitte, Morgan Stanley, and Goldman Sachs have all taken CFI courses. But of course, if you're not trying to break into finance, the knowledge alone is really good if you're just trying to be an independent investor. But with that said, if you're interested, make sure to check out one of the links down below to gain access to all the certificates that you can earn with the Corporate Finance Institute. Now, one of the things I mentioned for those that are insiders at Push and Profit Research was that we were likely going to see a cooling off in November, and that's exactly what we see in the S&P 500. But I talked about what we're going to be seeing in December, and honestly, it's pretty freaking interesting. And if you want to get insight to what I talk about with the market every single day that the market's open, what trade ideas I'm looking into, make sure to check out the link in the description and also the pinned comment of this video, because I have a massive sale to join the Push and Profit Research Insider Group for a massive discount where you could get access to my daily briefings and I talk about the market. But with that said, I want to also talk about something else. See, I actually ran across this image on Twitter or X or whatever you want to call it, and it's honestly a brilliant metaphor for the current economy if you want to make a point about AI, layoffs, and just the fragility of what we're actually seeing. Because on the first frame on the left, you see this full slice of cake, right? And it represents this illusion of stability. The economy looks solid on the surface, right? Because you look at the stock market, it looks great. But then on the second frame, what you see is a hollow slice held up by toothpicks. And it really reveals the underlying weakness holding it all together. Because at first glance, everything looks fine, right? Everything looks steady, new highs. This is great. But when you look closer, it's being held up by toothpicks. And so everything looks sweet until it's not. And so yes, we could continue seeing the market go up and kind of do what I mentioned is likely to take place in the next coming weeks. But if you got, again, that's stuff I talked about for the insiders at Push and Profit Research, right? Going into 2026. But eventually, if this trend with layoffs continues, well, everything can still crumble, and that's when Wall Street can crumble as well. Because eventually, when you have too many layoffs, who is going to be buying the products, right? Who is going to be supporting corporate earnings? Right? And so eventually things can start to look bad in 2026 if we don't have a major change. But with that said, I want to kind of leave this video off with a positive message. And this is just a message that if you're going through a tough situation right now, this is the time where you have to work on your skills and develop maybe new skills, maybe go into a whole new field, right? And don't be afraid to get your hands dirty. And I say this honestly, not just because I'm like, hey, you know, you should do that. I've done that in the past, right? There's been a time in my life where I had to get my hands dirty. In fact, I'll give you guys a real life scenario just because you guys made it this far in this video, right? There was a time where I decided to take a risk and, you know, just do trading full time. And then it was good for a little bit until I had a massive bad period, a massive few months, and I'm like, hey, I still need to pay the bills. What am I gonna do, right? And so I ended up getting my hands dirty by getting this, you know, job at UPS, and it was labor, right? I don't, you know, I didn't come from that, and I'm not trying to say, oh, I'm too prissy, right? I've never been afraid to get my hands dirty, right? But I had to suck it up and work for like, I think it was like $22 an hour, you know, just you know, putting the packages from, you know, the truck to the front door, which, by the way, I have the utmost respect for the UPS drivers, right? The people at the warehouse, I know a lot of them are getting laid off, unfortunately. But don't be afraid that while you're working on those skills to maybe go to get you into a further field and probably provide some more stability, that you may have to get your hands dirty. And that's perfectly fine. But with that said, hopefully you guys got some value in today's video, and I'll see you guys on the next one. Take care, guys.